they were having trouble finding a bank that was willing to loan them money. Translation, their loan request was denied, rejected.
Did you catch that? The Chicago Sky just got denied a $38 million bank loan. Yeah, denied. Financial institutions looked at Angel Reese and basically said, not worth the risk. This isn't just a financial L, it's a reality check. The banks are showing exactly what they really think about the so-called face of the WNBA's future. And yet, in the same week, Forbes drops an article crediting Angel Reese, not Caitlin Clark, for driving the league's growth. Are they serious? Let's break down why the banks aren't buying what the Sky and Forbes are selling, and what it means for a franchise that's still practicing at a YMCA school.
I received some information from a viewer on Twitter. Last summer, the Chicago Bravado proudly announced plans to build a state-of-the-art practice facility. As you guys know, due to severe financial constraints, or as normal people would call it, being broke, WNBA teams usually practice at the local YMCA, where they share half the court with prepubescent boys.
The Chicago Sky, a professional WNBA franchise, is literally practicing at local YMCAs. And no, it's not because their arena is under renovation. This isn't temporary. This is their normal. Just let that sink in. Elite athletes competing at the highest level of women's basketball don't even have a consistent training facility. How can a team be expected to compete with the league's best when they're running drills in a rec center?
If the local LGBT is booked for the day, practices are often moved to the driveway of unsuspecting neighbors who aren't home because they're working.
The Chicago Sky, a professional WNBA team with major star power like Angel Reese, is holding practices in YMCA and high school gyms. They're often sharing space with kids' camps and community rec programs, sometimes even forced to keep their training locations secret out of embarrassment. Picture this: elite athletes waiting for a youth league to finish before they can train, in gyms without locker rooms, recovery equipment, or even regulation courts. This isn't a temporary patch. It's been their reality, and it's putting them at a massive competitive disadvantage.
The Chicago Bravado were having a difficult time finding a consistent place to practice. And if you've ever seen the Chicago Bravado play pretend basketball, it is painfully obvious that practice isn't something that they do on a regular basis.
This isn't just a minor issue. It's a major red flag. The Sky might seem like a headline-grabbing franchise, but behind the curtain, they're fighting for gym space like a high school team. Even G League teams have better setups. These athletes deserve pro-level support, not makeshift solutions. It's more than unprofessional. It's a failure, and believe it or not, things are about to get even worse.
They were having difficulties finding places to practice. The Bravado decided that they would build a state-of-the-art practice facility. But there was just one problem, one tiny problem. The Chicago Bravado, they did not have the money to build the facility, but that's okay. That's okay. Since the WNBA is used to receiving sympathy money, since the WNBA believes they're entitled to money they haven't earned, they figured they could just go down to the sympathy bank and ask for a loan.
With nowhere to train, the Sky made what seemed like the obvious move: secure a $38 million loan to build a state-of-the-art practice facility. We're talking 40,000 plus square feet of dedicated space, custom built for the team and staff. Groundbreaking was set for this fall, with doors opening by December 2025 in Bedford Park. It was bold, ambitious, exactly what a struggling franchise needed, until the bank said no.
As in, they had the mock-ups for this huge, great facility without the money for the facility.
But then, something no one in mainstream sports media wants to admit: when the Sky walked into those banks with their $38 million proposal, they got flat out rejected. No negotiations, no second look, just no thanks. Think about that. Banks, whose entire business is lending money, took one look at the Chicago Sky's plan and walked away. This wasn't just a financial denial. It was a reality check, a loud one, on how the market truly views the franchise. And their supposed superstar Angel Reese.
Please give us this sympathy money. We have Angel Reese. She's a huge star. Dozens of people bought tickets last year to witness her mythical streak of double-doubles. We promise to pay you back within the next 200 or 300 years.
So picture this. Sky execs roll into a meeting full of confidence. They've got Angel Reese's follower count, highlight reels, and headlines loaded up. They pitch her as the face of a new era, claiming she'll drive enough buzz and revenue to easily handle a $38 million loan. But the banks looked at all that and said no. And that's telling. Because $38 million in sports, that's nothing. NBA players sign deals for that much every other week. If Reese's impact was really as big as some claim, that loan wouldn't even be a question. The fact that it got denied, that speaks louder than any social media stat.
A $38 million loan for a professional sports team, that should be approved without hesitation. And that's what the WNBA is, right? The WNBA is professional basketball, right?
After their bank rejection, the Chicago Sky turned to the village of Bedford Park asking for full, interest-free funding for their facility. A meeting on December 12th revealed the team's financial struggles. When a pro franchise has to ask a small village for help, it's a major red flag. The project's timeline has already been pushed from October 2025 to April 2026. But even that seems unrealistic with their current financial issues.
According to documentation from the village of Bedford Park, the Chicago Bravado, they were having trouble finding a bank that was willing to loan them money. Translation: their loan request was denied, rejected. So they went to the city council in Bedford Park, begging them to front the money for the facility. Not only did they want the taxpayers to front the money, they also wanted the loan to be interest-free.
What's most revealing here is the stark contrast between Angel Reese's media portrayal and her actual financial impact. While headlines may paint her as the face of the WNBA's growth, banks, who rely on hard data, not Instagram followers, aren't buying it. They looked at the real metrics, attendance, merchandise sales, and revenue forecasts, and found the Chicago Sky's projections lacking. In their eyes, the hype didn't translate into a solid return on a $38 million investment. This situation exposes a core truth in professional sports. Social media buzz doesn't guarantee revenue. Financial institutions don't care about likes. They care about dollars.
The fact that they're saying possibly by the start of next season, it's not happening by April 2026. The fact they're like, well, it's just not by this date, maybe by this other date in the quite far future. But yeah, it looks like it's an almost certainty that, it's just not going to be, it's not going to be there in the year of 2026.
Their decision, coupled with the Sky's sudden pivot to seeking village funding, raises serious red flags. If Reese's star power was as bankable as the media suggests, the team wouldn't be scrambling for public money. The numbers simply don't match the narrative.
I genuinely just think that they are just way too, we're way too ambitious on this. And look, I don't think long-term it's going to really affect the Sky. The on-the-court stuff is mainly what's going to affect.
What's particularly striking is that this loan rejection came during what many consider a high point for women's basketball popularity. The WNBA has been enjoying increased viewership and attention, yet banks still didn't see the Chicago Sky as a safe investment. That suggests they don't believe the team, even with Angel Reese, will benefit enough from this surge to justify the loan. Social media impressions do not equate to financial success. For context, the $38 million wasn't for a massive arena. It was just for a practice facility. Many college programs have training facilities that cost similar amounts or more. The fact that banks wouldn't even fund this relatively modest project, by professional sports standards, speaks volumes about their assessment of the Sky's revenue potential.
Social media impressions do not equate to popularity.
The banking denial wasn't just a financial setback for the Chicago Sky. It exposed a much bigger fantasy being pushed by major media. But it's far from over, because this is where things really start to get interesting.
It's genuinely looking like they're now just in a situation where it's going to happen. Like they can't get a loan, they're looking for the city to approve it, and it looks like the city are going to approve it. But it's just not going to be ready early enough. And I just think they were too ambitious. I think they were way too ambitious, being like, it's going to be done in a year. They were genuinely said they would have it ready.
Forbes magazine just published what might be the most misleading piece of sports journalism we've seen this year, claiming Angel Reese is single-handedly responsible for growing the WNBA. But when's the last time you saw someone pay their bills with Instagram likes?
The premise of this article from Forbes, it was trying to convince us that Caitlin Clark was not the only one responsible for elevating the WNBA dump. Matter of fact, Forbes tries to convince us that Angel Reese is more popular than Caitlin Clark and Paige Bueckers combined.
That's exactly what Forbes tried to sell us. The absurd idea that social media followers are somehow the ultimate measure of an athlete's value. Their article proudly announced that Angel Reese is more influential than Caitlin Clark and Paige Bueckers because she has more Instagram followers? Are you kidding me? Since when did double taps on selfies translate to actual revenue?